Hello, in this video we're going to use supply and demand to determine which side of the market benefits the most from a tax cut. So here is our supply and demand, where the equilibrium price before the tax is $10 and the equilibrium quantity is 10. So we're going to consider the following market that has a $9 per unit tax. If the tax is reduced to $3 per unit, a $6 tax cut, which side of the market benefits the most from a tax cut? So let's start with the $9 per unit tax. So before the tax cut, the tax in the market is $9 per unit, which is just the length of this red arrow here. 13 minus 4 is $9. That is the amount of the tax. So buyers are paying $13 when there's a tax in the market. The buyer's tax burden is 13 minus 10, 10 being the price without the tax. So buyers are paying $3 of this tax in the form of higher prices. So overall, buyers pay 1/3 of the tax in the form of higher prices, 3 divided by 9. Sellers are receiving only $4 in this market when there's a $9 tax, price read off the supply curve down here. The seller's tax burden is the difference between the equilibrium price, the price without the tax, and the price that sellers are clearing net of taxes, $4. So seller's tax burden now is $6. And sellers pay 2/3 of the tax in the form of lower prices, 6 divided by 9. The relatively more inelastic side of the market, in this case the supply curve, is more inelastic to demand, so sellers are going to pay the majority of the tax. Now let's look at the tax cut. Cutting the tax from $9 to $3 is a $6 tax cut. Buyers are now paying $11, so we find this $3 per unit tax now in the market, which is going to be given by this red arrow here, this smaller red arrow. So buyers are paying $11 now, and sellers are receiving $8. So with buyers, the buyer's tax cut is $2. $13 is what they were paying with the $9 per unit tax. $11 is now what buyers are paying when there is a tax cut, so a $2 saving. Buyers receive 1/3 of the tax cut in the form of lower prices. So buyers have a $2 tax cut, and the size of this tax cut was $6, so that is 1/3 of the tax cut. 1/3 of the tax cut goes to buyers in the form of lower prices. As for sellers, sellers are now receiving $8 due to this tax cut. So the difference between this 8 and 4 represents the seller's tax cut. Sellers receive 2/3 of the tax cut. Sellers are receiving $4 more per unit because of the tax cut, and 4 divided by 6, the size of the tax cut, is where this 2/3 is coming from. The relatively more inelastic side of the market receives most of the tax cut. So the supply side of the market is more inelastic than the demand side, and for a tax cut, the more inelastic side of the market will receive the majority of the tax cut. Okay, that's it.